Welcome everyone to the mask trading. So this is a video that a lot of people have asked me for. It's about my strategy. Now I can tell you exactly what I do, but you won't understand it because you haven't understood liquidity and why the banks sell and how they get in and out of their positions against people or hedge funds against their stops. I'm going to explain exactly why they do it, how they do it, and why this strategy is so effective. Okay, so right here, currently it's Friday. Just took a in the group. Just took a long on GU. If you got into that, now took it right down here. Now I'm going to explain to you why I did this. Now you've got to think in terms of, let's say the bank or the central bank, which owns this currency GU. They need to make money, and how are they going to make money? Well, it's against not retail stops like you and I because we're so small. It's mainly against big hedge funds and people of that size. For those that's who they're targeting to get in and out of their orders. So right here, this is a classic. The bank comes down, takes out Thursday low. Okay, right here they're buying at a discount against people's stops and against their orders. So if I was a hedge fund, and a lot of people will see this going lower, especially on London Open, it pierces down right here. Okay, retail, everyone's shorting. Shit, GU is going lower. But really, this is exactly what they want. They want to buy at a proper discount, these banks, okay, and they want to pair it against your order. So let's say right here, this is your order, and where you're going to place your stop above a high, right? This can be whatever. That's it. This is exactly how the banks look at you. Look at this. Okay, so let me dive a little bit deeper, try and explain this a little bit better for you guys. Now, I got this right on here. This is a great trade, nearly 6R. Sorry, on this trade. Now, to really understand the strategy, you need to understand liquidity, and this is liquidity 101. Okay, so right here, okay, yesterday, Thursday, you see, price shoots up right here on New York Open. Now everyone's buying, especially when it gets past here. Buying, retail buying. Put it on simple terms, buying. Oh, that's a short. Retail are buying. When it comes up, it keeps pumping up, especially when it gets up here. Retail buying, they're putting their stops under here, aren't they? Putting it, jamming it tight right there. And they want it to go, sorry about the noise, right up there further. Okay. Banks know this. People know that they want to. The only way they can get in is to pair their um, positions against your stop, and the only way they can get out is to pair it with your stops. So for example, like I just mentioned, the banks come down here, they take out your orders, everyone's orders, and they're buying at a proper discount. Okay, and now the only way they can get out of this market is because everyone's shorting, right? Short. Like I mentioned, let me show you a short. The only way these guys can get out of their orders is to pair it because their orders are so big. Does that make sense? Compare it against yours, and I don't mean like just your order. I mean big hedge funds, millions, sometimes billions. Okay, that's the only way they can get out up here. So they've made money in this run. Okay, so let me give you another example. And this is another trade I took. I didn't put this in the chat. Let's go back to basics on this one. High time frame, be a lot better. Okay. Price comes up here, takes out the high. Comes up here, keeps going up. Now what's everyone doing here? Can you guess? they are buying. Okay, so they're buying up here, meaning their stops at that low down here. Now look at that. Just so happens the market pierced this beer, and you can see, boom, it pierced. This is where they're getting out of their orders, and they're also buying as well. But I'll get into that later. Okay. So what the banks do? Buy a really high premium right up here, and then they slowly put the price down. And the only way they can get out of this premium up here is against yours and hedge funds stops down here. And this is all time based as well. You have to understand. Okay, these little brackets here are different kill zones. See, London open, New York open, London close. Okay, put down here. Okay, this is a great example. The banks are now getting out and they're buying. People short. They short all up here, here, buying right down here, and this is exactly right there. See that? 1 p.m. UK time. That's New York Open. Sorry. It pierces this. Now, if this is not making sense, I don't think it will at the start. You really have to look at the charts and see, and just think to yourself, why are the banks doing this? Why have they done this? And what are they doing next? Okay. So I explain my long round here. This one here. It's a bit different, but this here. Everyone down here, as soon as price smashes that, okay, people are shorting. See this? Where they place their stops, they could place it here, or they could probably place it up here, which is Thursday, which is now yesterday's high. Okay, they're shorting it, right, going, it can't go up here, my stop's so high, and they think it's going to drop. But really, it's exactly what the banks want. Because they're buying quickly here at a discount, and they're targeting, guess what? Your stop right here. And that's the only way that these guys can get out, and this is going to continue to happen forever, really, because they need to make money, and that's how you. That's my strategy. That's 101 liquidity and why it happens. So if you have any questions, just please let me know on Telegram. I can answer it a little bit more. I'm going to drop more videos on this. This is pretty much a low quality video, I would say. I'm going to do higher quality videos as we go on this year. Really, you got to think in terms of liquidity, because that's all it is. You just got to understand, why is there a currency here? What's it doing? Who's making money? And why, really? Because that's all it's about, money, isn't it? Okay, and you've got to be on the right side. But I suggest, if you want some homework, you should look into the sessions. You should look into the high and low of each day, and you should look into the sessions, high and low, and then you can see, okay, let's say on a high time frame. See, that's a low there, swing low. Okay, just next time when you're on a chart, have a look at that, monitor it, and see what it does next. And see on a lower time frame. See how it pierces that. Okay, most likely gonna go here, or the high, because the banks are buying, and then they're getting out their orders and they're making money against people's stops. So any questions, let me know, and there's going to be a lot more videos to come. Thanks for watching.